This is going to kick it off. I just need to get over here into my presentation. There we go. All right. Again, thank you for joining us. It's always a good time to discuss what's going on in the markets. Obviously, we've got a lot, and the markets are struggling today because of a whole host of reasons, not the least of which was that it's the end of the month and there is some bit of not necessarily rebalancing, but just some folks willing to take some profits. And again, can't blame them. If you are a short-term trader, I take my profits every day. Most of my trades are in a tax-deferred account, and that's why I do that. But if you're somebody paying regular capital gains on it, you better be awfully good if you're trying to day trade and flip in and out and still pay a lot of taxes on top of it. So let's get into 3 at 3. The disclaimer, this information is for educational purposes only. It is to inform, perhaps entertain, but it is certainly not financial advice. All right. If you'd like to learn more about it, you can go to marketrebellion.com/UOA. That's marketrebellion.com/UOA for unusual option activity. You can learn more about it at that website. You can also check out exactly all the different offerings we have. Unusual option activity, folks, is something that streams at you almost like a fire hose. We have about 20 trades on average per day. That's a lot. Now, that doesn't mean you have to follow every single one of them if you're somebody that subscribes, but obviously a lot of our subscribers are very active traders, and they do follow all of these. So let's get rolling. First of all, Apple is my biggest position. And many of you have heard me say this for a long time on Halftime Report. I'm very happy about that because it has made outlandish returns for me, and it remains my biggest position. What are my next two? Microsoft and Facebook. Target is a distant fourth. And for the most part, I've overwritten like crazy in Target right now, thinking that maybe we get a chance to nibble back in at 103. But let's focus on Apple, okay? My ADHD kicking in, folks. Okay, so Apple. I think here are the areas you need to watch for in the report tonight. Health, because the health component I don't think is properly appreciated. I think in an age of COVID, this is going to be key. Not just, for people that worry, well, what if the government's going to track everywhere I go? Well, the government is going to try to do that. They already try to do that. To some extent that they succeed at doing that. It is without the help of Apple. But nonetheless, some people will feel a little, well, I don't want my health information out there. Trust me, your health information is going to be getting out there one way or another. But Apple has a number of ventures into this space, not the least of which are their watches and so forth, but they have other wearables. So I would point out, folks, that wearable revenue was up 44%. That's 44% year over year in the first fiscal quarter. Now we're coming into their second quarter right now, even though it's for the first quarter, it's their second fiscal quarter. Anyway, I think they're going to put up another great number on wearables. Also, services. This has been a driver for a significant period of time already in Apple, and it will continue. They have an installed user base, folks, of 1.5 billion people. So as bullish as I have been on Facebook, and that's despite the fact that some people said, well, Doc, how can you possibly invest in Facebook? People don't trust them. Yeah, they do. A vast, or they don't trust them and yet they use them. So it's either people are really stupid or they do trust them and they don't really mind because they're putting their stuff out on Facebook anyway. Just like when you put it out on social media, in many cases people see it. In the case of Facebook, they're seeing it because they're your friends. but some people overshare. I try not to. Nonetheless, when Facebook put up that number that they have 1.73 billion, 1.73 billion people using their platform on a daily basis, look at what Apple's got, an installed base of 1.5 billion. You don't think those services are going through the roof on that? I do. So these are three areas: health, which plays into, of course, wearables, as well as services. I think you should be paying attention to all of those. Services revenue 17% higher year over year. All right, let's get into the fresh meat, shall we? And by the way, one more mention. I've got calls being bought. Now, this is expiration tomorrow, so be aware that calls being bought in Apple or puts being bought in Apple into an earnings report, not that surprising, but they are buying big numbers from right where the stock is here all the way to 310. Does it perform and give us that kind of a boost? Or did the fact that Apple has had to close all these stores and just started reopening them in China and South Korea, does that mean that Apple is going to struggle because of that? Like I say, these three reasons are why I think Apple can sustain the level that it's at. And I've overwritten aggressively against my position at basically at the money calls right now. That said, let's get into it. 3 at 3. The first is Morgan Stanley, bullish put selling. What is bullish put selling? That means that somebody takes on the role of Warren Buffett or Michael Dell or Bill Gates. These are all people that sold puts for most of their careers. And in most cases, in Gates and Dell's case, they were selling them on stocks that, that they founded. They were very confident, sold stock puts on those stocks, meaning they would be willing to buy more shares at those strike prices. That's what happens when you're selling a put. Well, in this case, Morgan Stanley trades down to $39.90, and less than an hour ago, I guess, somebody steps in and sells 6,000 July 35 puts. So bits of information contained there. July options, which are May, June, July, 3 months into the future. Another bit of information, they collected almost $2, which is $200 in option speak, because every option is for 100 shares. So that means that somebody did 1.2 million dollars rather. They took in a credit of 1.2 million for selling 6,300 of these calls for $200. $2 is $200. So I like to pay attention to that. Let's take a look at the chart and see where it's been. Well, here's a chart, a 1 month chart. As you see, broke all the way down to about $32 at the tail end of March. After it had already dipped, it dipped one more time. And then it made a run to $40.50 or so, maybe 41 twice. Today, it's down $1.50, trading 39.22. When we saw this, it was 39.90. So the opportunity here is better than it was just an hour ago, because Morgan Stanley has been rolling over. So if you sell those 35 puts, that means that you are giving somebody else the right to put stock into your account, because the owner has those rights, the owner of the put in this case, and the seller has obligations. The seller's obligation is to buy it at 35 less the premium they collected, $2, so basically 33. Looking at the chart, you might see why somebody might not be feeling too bad if they're forced to buy it at 33. At least that's their thinking right now. Watch this one. All right, next one. XLF. The XLF bullish combo. What were they doing? July 25 calls. So upside calls. Stock is at $22.80, let's call it, 20 cents under $23. So these calls are about $2.20 out of the money, above where it's trading right now, the XLF. They bought 34,000 of them, so that's 3.4 million share equivalent Because, let me hear it, that's right, every option's for 100 shares of stock. So 3.4 million share equivalent at $61 per means this is a big trade. Let's call it $1.8 million worth. That's bullish, folks. That's pretty darn bullish for the bank stocks, because XLF is, of course, bank sector of the S&P 500. SPDR, so spiders, there are several different verticals within that S&P 500. This would be the banks primarily in that space. So watch that. Here's the graph. As you can see, 2274 is where it was just before we went on air. And they are buying upside calls in here with it down almost 3%. So we're in there as well. I have bought those calls. Next one. It's a tanker. Well, take a guess what that tanker is all about. That's all about storage, just like those oil tanks behind it. These are above ground storage, those oil tanks. The other's floating storage, that is the tanker. So what do you think I'm going to give you for unusual activity for our final 3 at 3? Well, if you thought that maybe NAT, you would be right. Give yourself a cookie when you go home. NAT, we see people buying the out of the money October 7 calls. So that's NAT. They're buying the 7 calls with the stock at 622. So they bought those calls and they sold the 13 calls against it. So that means that if you net those two down, they paid, let's say, $2.29. They collected $1.16. So as you can see, that would be approximately $1.13 that they've paid for these calls. 4,000 times for that spread. They would own it between 7 and 13. So for those points, those $6, they would own that tanker company. And Nordic Tankers, as you can see from this 5-day chart, last Friday was just below 6. It made a big spike into the crude storage demand being extreme to almost $9. That would have been on Tuesday this week. And now it has bled back down to about 6. So you can see why somebody might want to get back in, take another bite of that apple, if you will. Remember, Apple earnings after the bell tonight. That said, I appreciate you guys dialing in and being with us. Remember, if you'd like to get any more information on our services, you can get it at marketrebellion.com/UOA. That's marketrebellion.com/UOA. I hope you have a great night. I'll see you soon. I am Jon Najarian from marketrebellion.com.